Okay, let's unpack this. Imagine starting with just like $100. What if you could take that small amount and potentially find a path to some significant growth, maybe even aiming for something like $100,000? It feels like a massive leap, yeah? But maybe it's a fascinating challenge, something worth exploring. And that's precisely what we're diving into today. We've been looking at this specific set of notes, an article really, that kind of zeroes in on this exact idea, starting with just $100 and exploring different ways you might, grow it. What's cool is it doesn't just list options. It lays them out along a really clear risk scale, from the absolute safest place all the way to the really wild high stakes stuff. It rates them 1 to 10.
Yeah, and what stands out about this material, I think, is how it takes this often intimidating world, finance, growing money, and it makes it feel accessible, starting from a genuinely small amount, just that $100. It's not about guaranteeing you'll get rich, obviously, but more about illustrating the spectrum, the possibilities, the trade-offs involved. So our mission here in this deep dive is really to walk through these specific methods the article presents, understand why they land where they do on that risk scale, and kind of grasp the insights this analysis offers. Anyone curious about leveraging even a little bit of money?
And the notes really do cover the entire landscape. I mean, from approaches where losing your initial 100 is like virtually impossible to those where maybe it's almost expected you might lose it.
Absolutely. So the material starts right at the low end, risk levels 1 and 2. Think about putting money into a high yield savings account. The article rates this a 1 out of 10 risk, super safe. Your principal's protected, but the return, minimal. We're talking pennies over a year, not thousands.
Right. Safe, but slow.
Exactly. Then, stepping up just a tiny bit to a 2 out of 10 risk, the notes mention something like investing in gold. The example given is pretty interesting. $100 invested in gold back in 2000 would be around $580 today. So it's a better return than savings for sure, but it does introduce market risk, hence the bump up the scale according to this analysis.
Okay. So leaving a sort of minimal risk zone, what does the source suggest introduces a bit more potential, even if it carries, a little more risk?
Well, the material moves us into risk level 3. And here it highlights things like index funds. The idea presented is investing $100 per month into an index fund over, say, 30 years. This is shown as a path that could potentially grow to over $120,000. The insight there is really about the power of consistent investing, compound growth over time, benefiting from market averages without, picking individual stocks.
Makes sense. Diversified.
Right. It's rated 3 out of 10 because, yeah, the market fluctuates, but that diversification generally smooths things out compared to single stocks. Also, at 3 out of 10, the notes bring up REITs, real estate investment trusts. The analysis describes these as like a way to invest in real estate without directly owning property. They often provide dividends, and it suggests an average return around 12% based on the examples used. Again, diversified exposure, but with its own market and sector risks.
Okay, it seems like the article is progressively introducing ways to get into different asset classes. What happens as we climb into the middle of the scale?
Yeah, it jumps us to 4 out of 10 risk with something quite different, flipping items, buying something cheap, selling it for more. The article even includes a little personal story, turning $75 into $150, flipping some RC gear. The risk here isn't just the market, it's about your skill, finding deals, knowing the market, putting in the actual work. It's active effort.
Right, different kind of risk than just passive investing.
Totally. Then, moving higher, stocks appear. They're pegged at a 6.5 out of 10 risk. The material definitely acknowledges the volatility of individual companies. It even humorously mentions a dart throwing monkey strategy before suggesting maybe putting that initial $100 into a major established company like Samsung in their example. This is where company specific performance really becomes a major factor, increases potential for gain, but also loss.
Okay, so now we're getting into the really high stakes territory in this analysis.
Yeah.
What does the source say are the paths carrying the most significant risk from that first $100?
Right. The notes peg cryptocurrency at a 9 out of 10 risk. That rating alone kind of tells the story, doesn't it? Extreme volatility described. The material gives a stark illustration. Start with $100, maybe it grows to $5,000 in a bull market, or it could plummet to just $17 from your 100.
Wow, that's quite a
It
range.
really underscores the wild swings possible and why it seems as such a high risk, high reward play compared to, traditional assets.
At just the very, very top, maximum risk.
That's the 10 out of 10, which the article explicitly links to the lottery. The author shares their own story of losing $50 on scratch cards. and strongly advises against it as a way to build wealth from $100. It's presented as just pure chance.
A gamble,
Pretty
basically.
much the least likely path to grow your money significantly, hence its spot at the absolute peak of the risk scale in this material.
So, what the analysis really does is map out this whole journey,
Mhm.
a potential journey you could take with just $100, all based on your appetite for risk, right? From the near guaranteed safety of savings through market approaches right up to that lottery ticket gamble.
Mhm. And this whole framework from the article, it raises a really interesting question for you, the listener. Looking at this wide spectrum of options, all starting from that modest $100, and considering the potential outcomes, the risks presented, where on that scale do you feel most comfortable starting your own exploration?
Yeah, if you had $100 in your hand right now, looking at these paths laid out in which one would you honestly choose? And what does that particular choice right now maybe tell you about your own personal relationship with risk and the pursuit of potential reward? It's definitely a fascinating starting point for thinking about your own financial journey.